Morning. Good morning,
Hello.
everyone.
Hello, everyone. Lydia Idem Finkley at Phase Might has joined us here in LAR. Great to have you here, Lydia, especially in front of the Fed and the wild action that we had last week. I'm very curious and interested in your views going into what finally could be the liftoff of rates next week. And thank you so much for joining us, Lydia. How have things
Nope.
been going?
Good. Thank you so much for having me back, especially, right into the year end, like you said, ahead of the Fed. And what an epic week we had last week. So
Wow.
it's been a great time in the markets, actually, this fourth quarter of the year.
Yeah, and I notice on Twitter you've been monitoring the euro pound. I know it's one of your favorite pairs, and
Right.
I was just guessing down there under 70, Lydia, that we might put in a right shoulder. But the euro pound, which I follow mainly because I did learn that from you to pay attention to euro pound, and that I've integrated it into my trading as foreshadowing currency to tell me about direction of the dollar, and the euro kept making new lows, new lows, new lows, and the euro pound could not. So maybe we could get to a screen share, and you could tell us what you're seeing, and if you think that the inflection from Draghi was just corrective or the beginning of something new. So you go to the green box up on the upper left-hand corner with the arrow in it.
Gotcha. You can see my charts.
Not yet, then you have to hit start. First you hit a chart, you select the chart you want to see, and then you hit start. Nothing yet.
Oh, I see. Okay.
See
Where
you
is
though. You look very pretty today. So we'll
Thank
see
you.
you, and I know that your charts are beautiful like you. So still not seeing anything. I think you have to hit the start.
I'm trying to find my screen. I can't.
Oh, I see.
Yeah, they're showing me my different screens, but they're not showing me my charts.
The ones that you want. Okay.
Yeah, oh, maybe it's this one. It says desktop. Google Hang. I'm so sorry.
That's
Go with
okay.
this one.
We've had people at times have to log out, log back in, and I'm still getting used to the Hangout, getting used to hanging in the Hangout.
I don't know which screen it's showing me. Okay. But that's not the screen I'd like to share.
So when I do it, okay, your screen went blank. When I click it, well, right now I'm probably going to be on camera. Well, I go to the full screen one and I click it, and then I just click start screen share, and my charts come up.
Okay, let me put it on the same screen as my charts and see what happens. If I share here.
So nothing much came out of Carney the other day. What, more double talk from Carney?
I don't know if he gave us double talk. I think he just didn't. I think he delivered. Really, we as market participants were expecting more, just expecting more easing, just a bigger bazooka. But he delivered the bazooka. So if you read my quid report, that's exactly what I said. He delivered the bazooka. It was just lighter than we expected. So
Okay.
in my view, he actually did deliver.
Okay. So I had your screen showing here. The euro pound's there. Okay. So.
Oh, okay, great.
Okay.
Go ahead.
So we're looking at the euro pound, and we did not make new lows.
Right here. Right.
Yeah. Right.
And
so,
this descent. You know what? Last time we talked, we actually were. It was before this ascent to 75, and we talked about how we were looking for it to go up.
Maybe it would pull back again, right? Yeah.
Right. And the fact that we hit this 50% fib, this larger one, really was looking for a decline to new lows, right? If we were completing the fib move, we really should have closed below 70 and saw an assault on the 69.29 lows. And
Right.
like you said, we didn't get that. And it took a while for this to materialize, but our ECB meeting last week delivered.
Yes.
We actually saw the signs ahead of the week, ahead of the meeting on that Monday, that this was actually a buying opportunity, which felt weird. So
Yeah.
those in the private feed who have access to my private feed, I said it feels weird, but you're gonna buy dips here. You want to buy this euro pound against this 70 with the stops below 69.80.
Yeah,
And
some guy on Twitter, Lydia, when I was, forecasting that we may not make a new low and put in a right shoulder, said that if you don't think euro pound is going to 69, under 69, you should apply for a job at a car wash. And I told him to send me the application.
well, I wonder
Then he
who's working at the
unfollowed.
car wash now.
Then after it rallied, he unfollowed me.
Oh, you think he would stay follow to you?
Yeah.
Maybe
So,
he's working at the car wash.
yeah. So, I'm of a mind that that was a pretty important inflection point, and I guess the next big test is going to be, does the dollar get a big lift when the Fed moves next week?
No,
No, I don't think
that's
so either.
that's my position. My position is it does not. And actually, I think we're going to see 2016. We're going to see we're going to see dollar weakness. That's what I think.
Okay.
So we've been rallying. It's kind of what is it? It's going to be in this case. It's going to be buy the rumor and it's going to be sell the fact.
Right.
So and it's much like the euro's reaction to the ECB. It was a
Right.
sell the rumor, buy the facts, same situation, right? I
Right.
think we're going to see that exact same thing happening with the dollar. And if we jump to the pound dollar, that's what we're seeing. So what surprised me was the velocity. Like, is 4-hour chart should be okay?
Yeah.
4-hour chart. So what surprised me was yesterday's decline through $1.50. That's what surprised me because, like, am I on? Okay, I'm sorry. Thought I had it on a smaller chart. But if you took a fib on this rally, last week's rally,
Right.
the 61.8 actually came in at the 50 at $1.50. So
Okay.
I anticipated that we would, and you see this candle did it, and then we got the break lower. But we would bounce off $1.50 and come back to the highs. But we broke lower on dollar strength, and but we never confirmed. We got this break lower, and then the following candle rallied and closed above $1.50, and now we have this subsequent rally.
I know
And
you're a big believer in 61.8 being the favorite fib for
yeah,
the
well,
pound.
50,
50?
50 is the favorite fib, but the 61.8 is the ultimate. That's my line in the sand. I mean my line in the sand when it comes to pound.
Just a suggestion, because I think a lot of people play 61.8 is that I don't want to change anything that works for you, but to me, just eyeballing it, it may have been 78.6 back at 49.5. And what I like about 78.6 is it shakes out the 61.8 players, and and then you just wait for it to get back above the 61.8. But
Oh, you're talking about adding the 76.
yeah, add the 78.6 to it, because I know I see a lot of 78.6% retracements, even 88.
Oh, and that would have put us around here, huh?
Yeah.
You're saying?
Yeah.
Okay.
But so here we are knocking at the door of 150,
Last week's
160,
high.
about to take that high out.
Yeah, and we are looking at $1.5250. We get a close above $1.5250, and we are headed back to the 54.50 highs. And this mess, this onslaught mess that we've had pretty much for the second half of this year, just trying to get above $1.55, and it's just been unsuccessful every single time. So if I could just at least move this so we have a visual of $1.55, right? Right around here. So you can, I mean, it's been for the entire second half of the year since we broke below it in August. We've just constantly been trying to get above on dollar weakness. it's been failing because people have been buying the dollar into the rate hike. So we thought we would get it in September, so that was this buy. We didn't,
Right.
so that was this disappointment. So then we waited. Maybe it was October. It was a possible
Yeah.
chance. Wasn't a high probability, but it was possible. So that was this buying. We got disappointed again. Now it's December. December seems likely, seems more and more likely, and so we're back to $1.50. But the market and even broke down to $1.49. But the market is not much like the euro. I don't think we're going to get the reaction that everyone thinks makes sense, which is dollar strength on a interest rate hike. I don't think that's the reaction that we will get.
Okay, so pretty much we've been in a 800 pip range ballpark. With your view on the dollar, you think that the pound has a chance of recovering and possibly even taking out that 158 level on a macro basis, or how are you going to play it? Say we get the interest rate increase, you'd be looking to buy pullbacks in cable and
I would
pullbacks.
be waiting to hear what we hear from the BOE this week. So when the Bank of England turned on us a little bit. They turned dovish about October. They turned dovish, and that was, in my view, in getting ahead of what was possibly going to be a Federal Reserve delay in the hike in October. So we got that. It wasn't a weak jobs report. It was just a disappointing jobs report. Um, not back 2 months ago in October, and it seemed that the Feds would delay even in December, that they would not hike rates. And you saw the Bank of England backpedal, because what has always been said is that the Bank of England would like to raise interest rates, but they would not want to do it before the Federal Reserve did. So I believe we saw backpedaling because most of the market believed at that time that the Fed would not raise interest rates. And we've had Yellen come out and talk, and all her rhetoric has been hawkish. She has not wavered from that. And she's had the jobs reports to back her up, back up that hawkish rhetoric. So if the Bank of England maintains its dovishness, I would be interested to see how the pound reacts. Typically, and most importantly, I think against the euro pound, because that is the interest rate. That's the exchange rate. I'm sorry, that the BOE watches more closely than cable. So if we get a weak pound here, which I think we can get a weak pound here, but we can still get a strong pound in the dollar, because a weak pound here would mean a strong euro, which would drag the euro dollar up. We would see a rally in the euro dollar, which would drag the pound dollar up as well. So
Yeah.
I just need to see, we just need to hear what's going on with the Bank of England. It's quite possible that with the Federal Reserve now pretty certain that they will raise interest rates, even if it's a one and done, or a one and 6 months later, that if they do raise interest rates, that it's quite possible that we hear the Bank of England come out hawkish again on Thursday. If that happens, you're going to see a pound rally pretty hard across the board. And what we want to see here is if this euro pound can actually break below 70 on that, if it would be enough.
Yeah, I'm favoring buying pullbacks to, say, the 71.40, 71 level on euro pound, thinking that eventually we're going to get back towards that 75 range. And, kind of my long-term campaign trade would be like a 79.80 euro pound.
I'm pretty bullish on the euro pound as well.
Okay. Do you have any levels that look interesting to you? If we've had a pretty nice wave, 360, about 300 pips from the low 270.
Yeah.
You have an area of interest should the euro pound pull back into that scenario?
I would be looking right now, short term, we're looking right in here.
Okay.
And we're paying attention to the larger. I haven't extended it yet, but if this one breaks, then we would be looking at the larger fib move would be down into 71.60, 71.30. So really 7150 is where we're going to, is that kind of pivot area.
Okay.
Um, but that would be the larger zone if this short term. But short term, we're kind of just we're buying dips short term here with 72 to support and a stop below the lows this week.
Okay, you answered, Ricardo had a question for you,
Sure.
and you answered part of it. You are expecting dollar weakness into 2016. He'd also like to know if you're favoring a risk-on scenario while that happens. Do you think that, for a while, equity markets were feeding on a strong dollar? Do you think that, that equity markets can also feed on a weak dollar, because a lot of people were thinking the strong dollar was hurting the market? So are you looking for risk on with dollar weakness or risk off? And if you
So
don't know, I could say I don't know.
that's a really good question, and I actually anticipate I would say a risk-on environment because
Okay.
I don't think that equities will weaken as much as people expect.
Okay.
Um, I believe that, and if we see that, we'll obviously see the yen start to weaken as well. I believe that the yen is weakening mostly because of a hawkish Bank of Japan and less on risk aversion. And so that's why we see this
Why are they
level.
getting hawkish when they just barely avoided recessionary readings? Do you have any idea why
It,
they're talking like hawks?
that their thinking is that their economy will improve further, especially into 2017. They believe that inflation will tick higher, if you've been paying attention to these central banks, Reserve Bank of Australia, the Bank of Canada, the Bank of Japan, all have been very hawkish on inflation in the last month, which has been strange because oil has been crashing, or in the same time frame. It's been consolidating. Let's give it that. It's been consolidating, but it's been grinding lower. And this week, after OPEC, we're getting a renewed wave lower. But so it's interesting to hear the central banks forecasting, because obviously their forecasts are ahead. They're not now um, outlooks. They're future outlooks, and they're pretty
Right.
hawkish. And the Bank of Japan is actually in that camp where they believe that inflation will rise because they're seeing pressures, wage pressures in their labor market, and that's pretty much the same with Reserve Bank of Australia. They're saying the same thing. Despite commodity prices, they're seeing wage increases in their labor markets as well. And
So that's
so,
interesting. The whole globe, except for China and Europe, are starting to talk more about the beginning of an interest rate cycle with rates heading up. So it's not just a divergence between Europe and the US anymore. There's divergence between Europe and um, the Asia and
I really would like
commodity
to hear
currencies.
yeah, I really want to hear what the Bank of England has to say, and because the Federal Reserve obviously would have this same kind of outlook as well if they're looking to raise interest rates to get ahead of inflation, right? The downturn that we've seen in actually I can even pull it out to a daily chart. This tremendous rally we've seen in the Aussie is part of that is because of the hawkish sentiment that was coming out of the Reserve Bank of Australia. And
Right.
just really, if you read the minutes, if you read the speech by Governor Stevens, like you would pick that up, even if the commentary around it didn't suggest it. So I think that the collapse in commodity prices this week is what is really dragging on the Aussie, dragging on the CAD, and we're seeing those currencies in particular collapse this week. Now and after their monetary policy announcement. So it's been an interesting time, but we trade technicals too. So with
Right.
the pound Aussie, it's just trading this channel. We touched the bottom of the channel last week, and even if it's being helped by the commodities, but particularly iron ore and copper with the Aussie, with those prices collapsing, but this rally was set to happen just based on technicals. And we're looking for this to we were looking for this to go to 209.50, and because we were cautious of these fib levels, and those were last week's highs. We've exceeded those, and now we're really looking for it to come back to the top of the range at 212. 212 is kind of the line in the sand on this with this pair as well. You can see it's finds support, it has found resistance, and so we're looking to see what happens once we hit this top of the range.
Okay.
Now CAD had been range bound for a while as well, and it's broken out. It was range bound at the 50 back here for a long time, for several weeks, and we're just breaking out this one, obviously, again on OPEC and the decision to maintain production levels in the face of a supply glut, really. So we were looking for it to test the 61.8, which is confluence with the 205 resistance level. We got that today, and now we're looking to see if price, if we get the confirmed close above, or if we get a dip. If we get a dip, you all know me, I'm going to be drawing a fib, and we'll see where the setup is on a dip lower.
Okay. So we talked about the Bank of Japan, and earlier you're on the guppy. We took out some support, cleaned out the stops under 84.
Yes.
We almost got to your 2015 target. You were real right about looking for $2. Almost got there, and this is corrective in your view, and perhaps we're going to challenge that. We'll get $2 in 2016. Is that your view?
If we get if equities can break out, yes, that would still be my view. But I'm watching. We would need to see some hawkishness. I want, the yen. The yen has always had the benefit of a dovish central bank, so it's interesting to see them pulling back from that sentiment and how the yen can react alongside that. So we're really having some struggle. I am hesitant to say that we would see 200 only because this 618 level was broken. If you drew this one, which I had since deleted, right. We got, was it this? I thought it was. I can't see my levels anymore. Where did it go? I think this is, no, that's the old 618. The 618 is here. Okay, I don't know if you can see it, but it's here.
Okay, what, 82.90-ish?
Yeah. And this was broken below when we got below 175. Down here, we got this really big break of the 618. So that, and all I've done is after I took that out, I redrew it to the next low. But we have yet to see follow through on that 618 lower, but we keep getting failed highs at 180 above 188. Right, so we've had this one at 188.26, this one at 188.80, and so we're still unable to get higher if we were to respect this Fibonacci move, but we're also not getting this follow through lower if we were to respect the break of that 61.8 with that move to 175. So to me, I'm hesitant to make huge predictions because I'm not really sure what equities will do. I don't think equities will collapse. I don't think that if we do see a crash lower, we might revisit the lows. We might break a little bit below that. But I do think that equities continue to grind higher, and that and if we do get that kind of scenario, what does the Bank of Japan say? There was a vote last month to reduce quantitative easing out of Bank of Japan. That's been very quiet. So can the yen really can really collapse to 200 if the Bank of Japan eases up on their accommodation policies?
Right. So it's you're neutral.
I'm pretty neutral on the guppy.
Okay.
I'm playing the levels. I'm technical.
Right. So maybe if we get through 86, we have another shot at that 88, 89 level.
We have to get through 87.
Up there, maybe we tried that level.
We
But
have
if
to
we
get
take out this 84 level that we're trying to hold, would you expect a retrace to your 100% retrace at the 180.34 level?
Yes, yes. If we get a close below 184, I'd expect a challenge of the 181 support level.
Okay.
Yeah, yeah.
All
So we
right,
have to
great.
get through 187.50 to challenge these highs. We have to get through 184 to return back to the lows. We need to stay below 181 to come back down to 175 down here. But we have to get out of this range, and we're basically just stuck in a range. And so, you know,
Maybe we're stuck. Maybe we're stuck until the Fed. I kind of think that
probably,
that was a big inflection point on Thursday, and maybe
absolutely.
what we have is a lot of book squaring or people just trying to adjust positions into the Fed next Wednesday.
Correct. Right. And into the year end, right? You know, there's
Oh
also
yeah,
going to be
that too.
for 2016. So it's a lot of there's a lot of flows going on right now. So
Okay.
yeah, definitely next week Wednesday it's going to be huge, and we'll see how markets react. Just as last week. I mean, last week was really big. Was really good week.
Momentous. Yeah, that
Yeah.
was the biggest move. That's interesting. That was the biggest move in the euro since the bottom of the financial crisis in
Wow.
March of '09. Someone showed me a pound Kiwi chart today that looked pretty constructive to me. You showed the pound Aussie, so I'm assuming the pound Kiwi looks pretty good to you as well.
Yeah. Yes, it does. So pound Kiwi is also in a range. Well, it's been in a range. It was a short-term range between 230 and 224. And then it broke out of that range, and it got, well, here, and it got bullish here. And we got bullish with it. We were able to take this to 235, and it went a little higher. But then it came down, and it went below 230, and we got bearish with that, saying that it would come to the bottom of the range. So last week we got that. And for this week, I said that if we don't stay below, because we got the close below 224, which should have been a bearish signal, but that if we didn't, the bigger move was this Fibonacci move. The lows last week actually held about 8 pips ahead of this big 50 back.
Yeah.
Which
Yeah, so
becomes
it
very
looks like we have a
bullish
lot of setups that held major support. They're all attempting rallies right now,
on
and
very volatile
those,
moves too.
yeah, and those lows are make it or break it for a lot of the pound crosses.
Yes, and so what we're seeing is a hold of the huge 50 back, where we saw, and then we're also seeing a hold of the range. So just based on the range, we see this going to 230. We
Okay.
do have our fib levels in here, and they have been areas of resistance. So we just hit the 238, and we saw pullbacks, slight pullbacks off 228 when we hit the 38.2 level. Now we're, charging forward, and we'd expect to come here to the 50 back on this move and see what happens at 230. But
Okay,
yes,
Lydia.
pound Kiwi is also very constructive this week.
Okay. So, people, I know you have the quid, you have your newsletter, you're also managing funds as an RIA. So, why don't you tell the community how they could receive your work and give them some details about how to keep in touch with your analysis into the Fed and going forward to be prepared with your work into 2016.
So the website for the report is let's see if I can get it to show up here. Great. Is bit.ly at quid // quid report. And the capital letters matter, so make sure you capitalize quid and report. And you can subscribe to the report there. It's a weekly report. You can also contact me directly through that platform with comments or questions. Subscribing to the quid report here, though, through this link will give you access to the private Twitter feed that's associated with the Quid Report. So the Quid Report comes out every Monday after the New York close. And then as the week develops, as you know, since we have a weekly outlook, things can change, especially as things develop fundamentally with different announcements and data releases. So the private Twitter feed gives those updates daily to the report. So,
Okay.
like I had like just last week for an example, just because of the setups on the technicals, the euro pound was bearish. We had a bearish outlook on Monday. While I was finalizing the report, I saw that I saw the bullish momentum building. We weren't getting below zero point 0.7, and this is ahead of the ECB. And we published, but then we updated immediately that the euro pound is now bullish and that we actually want to buy. And we were telling folks to buy at zero point 0.7. On that Tuesday, we were at 0.730, 70.30. We said buy then, and we held it through 72.50. So
Nice.
the private Twitter feed, I think, is almost as valuable or more valuable than the weekly report. But I do also want to say that traders are expected to trade their systems, that I provide direction, and
We're all captains of our own ship.
correct. So that it will work best with those who know, basically, who know how to trade. I would say the Quid report is for intermediate to advanced traders who are just looking to have more clarity on the pound and how to
Yeah,
trade pairs
you're part
there.
of their you're part of their intelligence gathering.
I hope to be.
Well, you are, Lydia. So your hopes are fulfilled. I want to wish you a
Thank
Merry
you.
Christmas, Lydia, my trading warrior sister, and thank you for hanging out with us today, Lydia. I'm a fan, and you deserve your title of Cable Queen. And
Thank you.
thank you so much for giving us some of your numbers and your expectations into next year. And as always, I hope that like snowflakes, pips just drop on you and everyone that follows your work.
Thank you, Dale. Thank you. Have a great Christmas. Enjoy these last few weeks of trading. Everybody, keep your noses clean. Um, while everyone's enjoying Christmas, our markets are still open. So happy trades to everybody out there. Thanks so much for always having me on, Dale.
Okay, well,
Happy New Year.
count on being back several times next year, my friend.
I will. I'm holding you to
Uh,
it. Thank you.
all right, good hunting, Lydia. Thank you very
Thank
much.
you.
That's Lydia Idem Finkley at Face.